This is your Mortgage Rate Watch for Monday, December the 13th, and I'm Keith Akata with the Mortgage Reel. So, last week we closed the recap basically by talking about China and where they were fighting their inflation concerns that originally predicted were at 4.4%, were predicted at 4.7, and came in at a whopping 5.1. So definitely they're fighting inflation. But here's the most interesting thing. The markets were all poised for China to raise their interest rates over the weekend, and instead they relying now on tightening the bank's reserves and lending requirements. So that's technically a good sign for our bond market because that means we're not going to have to fight for investor funds as aggressively as we had thought, which is good for homeowners because that means interest rates may not spike as hard. Another thing that's very interesting too is tomorrow the Federal Reserve is having their meeting and they expected to make a lot of comments around QE2. Recently we've seen a steep rise in homeowners' interest rates, and that could stun the market. And with such a fragile economy, if the markets rise too sharply, then what could be the concern is that the housing markets could stall and then further potentially put a halt on the economic recovery. So what may be expected is the Fed may try to what they call jawbone the market higher, the bond market higher. And what this could mean is they're basically going to try to instill some confidence in the markets to show that the U.S. bond market is still a good place for investors to invest for the long term, and that would then hopefully push yields down. So that's going to be interesting to see what's going to come out tomorrow from the Federal Reserve announcements. Another thing too is going into this week we have reads on inflation in the United States, we have reads on retail sales and housing. So volatile, definitely, it's going to be extremely bumpy. Taking a look at today's bond page, we started off the morning in the negative, and now we're closing we're getting ready to move on into the afternoon into the positive. So that's another good sign for at least finding, hopefully, the floor support or what we call a bottom right now. So hopefully interest rates won't move much higher. Any breaking news, make sure to follow us on our Twitter page. And now we have our Facebook page up, so make sure you check us out at Facebook at How to Beat the Banks, and make sure you take a look at the wall. And we'll be putting up a lot more information there. So if you have the chance, make sure to watch the video and like us. We'll be back tomorrow with more breaking news, of course, on what's going on with the Federal Reserve meeting. Talk to you soon.